The following podcast was recorded on Wednesday, June 8th, 2022, featuring Jim Bianco of Bianco Research. To hear the podcast in real time, you can sign up for a free trial at biancoresearch.com or arborresearch.com or by emailing Gus Handler directly at gus.handler@arborresearch.com. You can also call Arbor Research and Trading at 1-800-606-1872. Thanks for your time and enjoy the podcast. Welcome everyone to the latest edition of Talking Data. I'm your host, Kristen Radosh with Arbor Research and Trading, joined today by our presenter, Jim Bianco of Bianco Research. Welcome, Jim.
Hi, thanks for having me.
Today, Jim answers the question, is there still a Team Transitory? Jim, what are your thoughts?
Yes, there is still a Team Transitory. And no, it has never really gone away. So if we look at the first slide here, this is a tweet a couple of days ago from Mark Zandi, chief economist at Moody's Analytics. Now, I'm not picking on Zandi because there's plenty of other economists that I could have chose, but this one was top of mind, and that he is basically suggesting that if my diagnosis is correct, then assuming the pandemic fades and the worst of the fallout from the Russian aggression is at hand, $120 barrel of oil, then inflation peaks in Q1 and will significantly moderate this year and next year, but these are tenuous assumptions. So let me give you a definition of what Team Transitory means currently in June of 2022. It's what Zandi's trying to say. It means we don't have to do anything about inflation. Just sit there, just wait, hold your breath, it will peak, it will go away. All of the things that are causing inflation are naturally going to run off by themselves. We don't need a tight Federal Reserve policy. We don't need restrictive policies from the government or anybody else. So if you go to the next chart, just to give you an idea that I'm just not picking on Zandi, these are OECD forecasts. So these are the forecasts for inflation for all the different OECD countries. Notice they all go straight to 2%, and then it's a horizontal line right after that. Everybody thinks that this inflation that we're getting is naturally going to disappear, and we're going to return to some pre-pandemic level of inflation, 2019, and we're going to continue to go sideways. Just to highlight this one more time, if you go to the next chart, this is from last month's survey of global fund managers from Bank of America. They surveyed 300 global fund managers. This month's survey will be out next week. But last month's survey said, what is the biggest fear, biggest tail risk, as they called it? Hawkish central bank went up to number 1. Global recession was number 2. Inflation fell as number 3. And so basically what they're trying to say to you is the Fed's going to go too far. They're going to cause a global recession, and inflation is not as big a worry. So therefore, if we go to the next chart, what this shows is they asked these global fund managers, how many times is the Fed going to raise rates this cycle? Now, keep in mind, a rate hike is 25 basis points. They've already done 3 of them. They hiked 25 basis points in March. They hiked twice, or 50 basis points in May. Next week is the next Fed meeting. There's a 100% probability they're going to hike at that one, 50. The Fed has never failed to deliver on 100% probability. Most of the time, 100% probabilities are for no move, but they've never failed on one anyway. So that's 5 right there. And if they raise 50 basis points again in July, that's 7. These fund managers think they're going to do 8. What they're basically telling you is the Fed is going to be done with its rate hike cycle, or essentially done by the July meeting, done for good. Again, what would be the assumption on that? Recession, hawkish central bank is the biggest worries. Inflation is not. We don't have to do anything about inflation. It will peak and it will go away by itself. So the point here is Team Transitory still exists. It is a minority opinion. It is not the majority opinion, but it's probably a third to 40% of the belief. So whenever you hear anybody say it's all priced in, it's not. It's priced, it is majority priced in. the idea that we've got an inflation problem, but there's enough people that still won't say it out loud like Zandy did, but inflation, they still believe nothing needs to be done about it. It will peak, it will go away by itself, and that, according to Zandy's quote, when he talked about $120 crude oil, also includes gas prices. Nothing needs to be done there either. Just wait. It will peak, it will go away.
Jim, how has the change in consumption impacted inflation?
Right, so I would argue, and this will get into the third question here. This chart here comes from Zandy again, and he put together a chart where he indexed it to February 2020, the beginning of the pandemic. The green line is total spending on goods. That's about 15% higher than it was pre-pandemic. The red line is total spending on services. That is below trend. Overall spending is blue, and that dashed line is trend. So what I'm showing you is there's been a shift in consumption. We purchase more things, we purchase less services. Because we purchase more things, that's why the price of things has gone up, why we have this chronic supply chain problem that we always keep talking about. We get interested in container ships and other logistical issues that we're looking at because we've been looking at the surge of goods spending. Now, most of the transitory economists think this will go away, that these will converge back to where they were pre-pandemic. Well, it's been 28 months and they haven't. So what's been happening in this post-pandemic era that's been leading to this inflation has been a shift in the consumption pattern, that we have been consuming more stuff and we've been consuming less services.
So what is the economy's new normal?
Yeah, so if we go to the next chart, this gets to this idea here. This comes from Google Mobility. And boy, this is Big Brother if there ever was one. So on your phone, and I'm showing my phone on the podcast, Google Maps, if you have the app, even if you have an Apple phone, if you have the app, it will track your location all the time. Every phone it does. And they publish aggregate statistics. They don't publish statistics on me personally or you personally. And so they looked at what the orange line shows is they looked at our increased stay at home. So the orange line means that by March of 2020, we were 17% more in our residence. How did they know where our residence is? Where does your phone spend every night? They figure that's your residence. And in March of 2020, we were spending more time at home. We were locked down. And that's what the big orange line going up does. Then you'll see it popped again in January of this year when the Omicron virus came. We were basically back at home as well. But currently, it's at the lowest level that we've seen since the pandemic, meaning we are getting out of the house now more than any other time since the pandemic began. The yellow line on this chart is transit stations, buses, trains, subways, commuter L trains. How much are we getting back on those trains? That's back to zero, or that's back to pre-pandemic levels. So in looking at the economy and Team Transitory, I want to just make one point here, first of all, with this chart. And what it is showing you is we are getting out of the house more than we've ever have pre-pandemic, post-pandemic, to the point where we are getting out of the house as much as we did pre-pandemic, and we are traveling locally as much as we have pre-pandemic. So if we go to the next chart shows, but we're not going to the office. This is the Castle. Castle is that key card swipe company, and they have hundreds of offices that they manage across the country, and they publish these statistics on the number of key card swipe usages in all of those offices as how much the office is getting used. It's 42%. We're only 42% usage of the office versus pre-pandemic. So I'm getting out of the house, you're getting out of the house, we're getting on the train, we're getting on the bus, we're going to places. Those places we're going to is not the office. So if we look at the next chart basically shows New York City. And in New York City, we're seeing a little bit of a different shift as well too. The blue line is the bridge and tunnel usage. So how much are people paying the tolls at bridges and tunnels to get into Manhattan? That's 100% back, or to be more specific, it is 99.2% back to where it was pre-pandemic. The number of cars coming into Manhattan is the same as it was pre-pandemic. But the red line is buses, and the blue line and the green line is the subway. They're at around 63% of what they were pre-pandemic. Now, pre-pandemic, of course, you were commuting to work. Office usage, according to Castle in New York City, is around 40%. So 40 of that 60% is probably people going to the office. The other 20% is people just getting on the subway and going somewhere to do something, maybe Central Park, maybe to a store, maybe to visit a friend or something like that. So if we sum all this up in the last chart we have here, this last chart shows various activities, and they benchmark to 100% of pre-pandemic. So the orange line is restaurant reservations from OpenTable. That's 100%. We are going back to restaurants as much as we have pre-pandemic. The red line is throughput at the airport, the TSA throughput at the airport. That is 94%. So essentially, we are back to the same. And if you've been to the airport, you see it's just as crowded as it was in 2019. The thick green line is NBA attendance. Now, we picked that because it's an indoor activity. The NBA season that was just completed, this is regular season, they're in the playoffs right now, was 96% attendance of what it was pre-pandemic. So people going back to NBA games, they're averaging like 17,700 people a game again, like they were pre-pandemic. We are going back to all that. But the two things we're not doing is we're not going back to the office, which is the blue line, that's Castle again. And the cyan line, or the lighter blue line, is we're not going to movies. We're only back to 60% of the way to movies. So let me sum all this up. The Mark Zandi, the Team Transitory crowd says it's all these one-off things that are causing us to spend a lot of money on goods, which is pushing up inflation. But don't you worry. When people get out of the house and the pandemic is over, they're going to go back to 2019. They're going back to the office. They're going back to movies. They're going back to their spending patterns in 2019. They've already done that. And what I'm trying to argue is this is the new economy. The new economy does not include going to the office as much. It does not include going to movies. It does not include traveling around New York City as much as we used to, largely because of work from home. Only about 2/3 of the way. It does include driving in New York City as much as we did before. This is your new economy. This Team Transitory argument, you wait till the pandemic has worn off. It already is worn off. That we need to understand that this consumption pattern shift is more permanent. This work from home, remote work thing is more permanent. That there is no more reopening that needs to be done. There are very few, if any, people that are sitting in their home in June of 2022 wondering if it's safe to go out. There might be some people with comorbidities that are in that category, but that's a very small percentage of people. This is the new economy. And with it is that consumption basket shift. With it is more persistent inflation, and that this idea that you just wait, do nothing, and everything will return back to 2019. I don't think it's going to happen. And so this idea that we have to worry about a recession, yes, we do, because the only way to rein in inflation is to get aggressive on tightening, and tighten to the point where it causes people to stop spending or spend less, demand things less. That brings down inflation. But this Team Transitory argument, which is 1/3 to 40%, I think, of the universe in the markets, we don't want to create a recession. We don't want to do anything. Just sit there, hold your breath, and inflation will go away, because we have to wait for the economy to get past the effects of the pandemic. It already is. And the last statistic I'll give you is, have anybody noticed that we have nearly 200,000 coronavirus cases a day in the United States? US is the only major place in the world where coronavirus cases are going up. No one cares. There's no restrictions. No one's talking about restrictions. A few places are trying to institute mask mandates here and there, but that's it. And it's very few and very far between. But normally when we got to 200,000 cases, we were shutting things down left or right. We're at 200,000 cases now. No one wants to touch that. That's a third rail right now. The point is we are reopened. This is the new economy. And so this idea that we have to wait for something else, it isn't going to happen. And inflation isn't persistent. The only way to bring down inflation is for tightening policy to slow down demand. And yes, that is going to risk a recession as well too.
Thank you, Jim, for your thoughts today, and thank you everyone for joining us. As a reminder, we are client driven. If you have any questions or feedback on future topics, please let us know. For further information on Arbor Research, Bianco Research, or Arbor Data Science, please contact Gus Handler at gus.handler@arborresearch.com. Have a great day.